Hi everybody, I'd like to thank the Saskatchewan Pulse Growers for giving me the opportunity to come and speak to you all. Agrocorp International is a trading house located in Singapore, in the global financial hub of Singapore. We have representation in 12 countries globally, and we handle a significant amount of the yellow peas that come out of Canada through the line companies and in containers as well. At the end of the presentation, my email will be there, and if you guys have any questions after this that you want to bring up or any discussion you want to have throughout the year, please feel free to email me. Basically, we're going to be echoing some of the same comments that Mike brought up. We started off this year with a very tight S&D look. Globally, we were looking to be about 1 million tons down. That did turn out to be the case. What we didn't expect, and what really took the international trade by surprise, and domestically here as well, although we really don't feel it that as prominently here in Canada, especially in Western Canada, where there's significant economic advancement happening, is some currency tsunamis, and Mike touched on that a little bit. But I'll get a little bit more in depth into how that affects the global trade. Then I'll talk a little bit about the bulls and the bears and the balance of the arguments on what to do. And as a trader, it's my job to be a little bit more bearish than Mike. So I'll make my case, and then I'll give the summary there. So we had a start here of about 2.4 million tons. The production and the carry-in numbers varied, but that's the general consensus from what I talked to the trade. I'd like to thank Mark Bergen and Quentin Stewart, my colleagues, who helped me come to those numbers and the discussions we had to get there. Global year-over-year pea production shortfall, as I mentioned, was about 1 million metric tons, and we had a very strong export season despite all of the turmoil that happened. There was a lot of business on the books done up until the fall, and that translated into a very strong shipping period. Although I would say that from September forward up until today, there's been very little additional tonnages contracted, probably somewhere only around 100,000 tons, which is a little bit scary. So this is the numbers as they look, and this is approximations, but you can see India, it took their 550,000 tons, which puts them on track to hit their 1.1 million tons this year. But this, as I mentioned, this trend is stalled, and the Indian market has really reeled from a currency devaluation, and that's created a lot of hesitation in the marketplace there. So there is some worries there that 1.1 million may not be attainable. China has been very aggressive. They've taken 320,000 tons. There's an estimate that they could get to 550,000 tons, and some people in the Chinese trade expect that they could even get to 750,000, which would be a phenomenal number in China's terms, having only taken 500,000 tons last year. They're on a very, very strong growth path. Bangladesh again is another market that's really been hit hard by the currency crisis, and they've stalled at 100,000 tons. Again, this is a lot of pre-contracted product. The annual projection there is 250,000 tons. We'll have to see what happens if buyers decide to come back in the market and pay more, or if the currencies actually stall the market and we need to see a decrease in pricing on this side. There's been a couple of trades to Cuba already, with another one to go in the spring, and then we've got, you can see the total there on the annual projection. If we have 2.4 million tons. As Mike said, even with a 200,000 ton carryover, this shows 50,000 tons. We're very, very tight. So there's room. I mean, the traders generally in Canada were expecting $12, $13 bushel prices by the spring, and that, you know, on the bullish side. But again, we've faced some headwinds. So just to give you guys an example, we've all had some exposure, somewhat in our daily lives, to the volatility of the Canadian dollar, and you can see, you know, throughout the course of 2011, it was up and down quite a bit, but overall throughout the year, it stayed relatively flat. We had you know, these are snapshots, so if you look at it today, you're going to get a little bit of a different percentage, but 2.5% overall throughout the year certainly makes all the pain and suffering of working through hedging programs seem a little bit off. But this is what the year produced. If you compare that again to the USD versus the euro, again, this was a currency that was expected to have the bottom fall out. One particular company, MF Global in New York, headed by a former governor of New Jersey, Joe Corzine, actually bet the farm, or at least MF Global did, which he was heading, and they went under. It was a multi-billion-dollar risk management trading house that expected, like many people in the global trade, that the euro would devalue significantly. And it cost them their company. They're still trying to find $1.2 billion of that money. So looking at those two graphs, you can see the contrast to what happened throughout the year in India. And this, again, is a snapshot. If you look at it today, you'll get something closer to 20%. But you can see, and I guess the most important part to point out is the short amount of time it took to get from a $44 exchange to a 52, and although today, actually this morning, it's popped back up a little bit to 51, and it looks like there might be a bit of a bottom happening again in the China market. You can see there is some bottoming going on, and some hope that things will improve. This has been disastrous for Indian importers who, you know, again, the small ma-and-pa downstream distributors that aren't as sophisticated in their risk management techniques and their hedging basically have now had the inability to bring their currency back into to the rupee without suffering significant loss. Again, here's Turkey. Turkey is more of a chickpea market, and doesn't affect the overall pea market as significantly. But again, you can see a similar trend. And for countries like Bangladesh and the Middle Eastern countries where this data is a little bit harder to find, this shows the trend of what's happening in North Africa, the Middle East, and India subcontinent. So it's not all bad news. We've got China. They've had actually their dollar appreciate. In the news recently, it's been explored about their trade deficit. It's a growing deficit, which is really hard to imagine, given that they supply the world's full of Walmart goods and everything else. They're actually importing quite a bit more now, and that trade surplus is why the Chinese central bank is allowing their currency to appreciate. Finally, after lots of many years of U.S. pressure, economics took its course. So China, this again correlates to the amount of product that China is taking. They are very good at recognizing the bottom in markets. So there is a recognition here that they've been buying what they believe will be the cheapest peas of the year. So just to go back over the bull arguments. Kind of echoing some of Murad's earlier comments, they're on top of the world's need for cheaper food to come in and replace the protein. International markets are finding new ways to use the pea and the starch and the fiber beyond the vermicelli, the famous vermicelli noodle from China. They're doing really interesting things with the starch. learning how to make it into cardboard and use it as a reinforcement material. That's just one example. There's hundreds. And recently, the Indian government has taken steps to shore up the economic malice that they've endured. In 2010, you can see that they had a $29.4 billion investment inflow, and that quickly changed to a $454 million outflow in 2011, which you're talking about $30 billion of loss. A lot of the speculation is surrounding that shows that it's due to the ECB and other European countries pulling investments out of India in order to shore up their own debts and their own economies. The Indian government has responded just last week by announcing that they're going to allow foreign participation in their stock markets, which previously wasn't allowed. And they will previously the only way you could participate was through participatory notes and in foreign exchanges. And so this is a new thing where foreigners can actually now go and invest directly into the Indian marketplace. India's raw crop pulse acres are down by 1.2%. This is going to have a forecasted production down as 5%. Overall, in India, this is a significant amount of tonnage. The China demand I already touched on. From the bear perspective, there's strong macro headwinds. Europe leading the charge there. This is, to me, the biggest threat. You can't predict anything that's going to go on. In 2009, when the North American markets recovered to some degree, the economists were predicting that in a couple of years the second shoe would drop and that Europe would have its own crisis. And so 2 years later, for some reason, the politicians were all super startled when the crisis commenced. And so the economists continue to predict these things, and they continue to be ignored. And most of the economists that were involved in the prediction of the 2008 crisis and this one as well are predicting a very bad year in Europe. So I would definitely yield caution in the marketing from that perspective. Pea production in Canada could be much higher than reported. The trade is reporting different numbers. Some numbers are showing more acres went to lentils than what was came out of the lentils than was initially reported and went into peas. So there might be more peas out there. Early Chinese New Year could reduce overall Chinese demand. The Chinese New Year is happening earlier this year at the end of this month, and this typically stalls the market from their perspective for almost a month. It's a huge holiday. People go all over usually from the big cities, and they go back home and take the trains, and it's a huge ordeal for the workers to go back to families, and it literally shuts down the economy. Overall, the Chinese stability is becoming questionable. There is figures coming out in their purchasing index, the trade deficit, that show that there's some systemic weaknesses developing that could lend to an overall slowdown in China, which obviously would have a direct effect on Canada as a main exporter of commodities to them. The pea marketing is grinded to a halt. Green is a bit of an exception. There's still been quite a bit of green pea trade going on, but yellow peas have literally come to a halt for the time being. So the summary is the demand story is there. It's a continuing story. We all talk about it every time we meet every year. There's the need for food globally, but right now global liquidity and currency volatility are providing a lot of headwinds. Production set to recover in 2012. There could be upwards of another 3.8 million acre year here in Canada. So there could be some strong production But again, I would agree with Mike to maybe wait a bit for pricing until you can see a little more clear on what's going to be put in the ground for 2012. So the best advice for Saskatoon Pulse Days 2012 is stick close to the guys who sold their chickpeas early. They should be leading the charge at the bar. For any questions or comments, please feel free to contact me. Thanks and Happy New Year.